Testing, 1, 2, 3. Hello everyone. In this video, let's talk about Form 2555 for expats, digital nomads, and full-time travelers. Here's a tax benefit that can eliminate taxes on up to $126,500 this tax season. It's the Foreign Earned Income Exclusion. It is a tax benefit for U.S. citizens and residents, aliens, who live and work abroad. It helps reduce your taxable income by excluding a portion of your foreign earnings from U.S. taxes. For the 2025 tax season, the exclusion amount is $126,500 per individual. This means you can exclude up to $126,500 of your income earned in a foreign country if you meet the requirements. Now, there's some loopholes here, and I'm going to share that with you. I'm Sandy Ingram, aka C. Ingram to the IRS. I am retired, now traveling the world slowly. I am still registered with the Department of Treasury, IRS, since 1999-2000 tax season. I have over 10,000 tax students on Udemy, where I have taught small business owners and individuals how to legally lower their taxes year after year after year. I am in Buenos Aires for now, and slow travel means that I stay in one place for 30 to 90 days, or however long my U.S. passport allows. To qualify for the Foreign Earned Income Exclusion, you must have a tax home in a foreign country. But hold on, and meet one of two tests, the physical presence test or the Bona Fide Residence Test. And if you are a digital nomad, this is a very easy test to pass. If you are an expat, it's even easier. And if you are a full-time traveler, you too can qualify for this tax benefit. The physical presence test requires you to be physically present in a foreign country or countries for at least 330 days during a 12-month period. The Bona Fide Residence Test, on the other hand, requires you to establish that you are a resident of a foreign country for an uninterrupted period that includes an entire tax season or tax year. These tests ensure that the exclusion is available only to people who genuinely live and work overseas or offshore or in another country. Here's an example to make it clearer. Imagine Sarah, a U.S. citizen, moved to France in January of 2023 for a job. She earned $130,000 in wages while living and working full-time. Now, Sarah qualifies for the Foreign Earned Income Exclusion because she meets the physical presence test, having spent more than 330 days in France during a 12-month period. For the 2024-2025 tax season, Sarah can exclude up to $126,500 of her $130,000 foreign earnings from her U.S. taxable income. This means she only needs to pay the U.S. taxes on $3,500 of her income. By claiming the exclusion, Sarah reduces her tax bill big time. Now, it's important to note that only earned income such as wages, salaries, or self-employment income qualifies for this exclusion. Let me repeat that. Self-employment income qualifies for this exclusion. Okay, maybe you did not hear me. Self-employed income qualifies for this exclusion. I'm saying that digital nomads and people living and working in other countries are getting over $100,000 a year in tax benefits. Passive income, like rental income, dividends, or interest, does not qualify. Passive income, like rental income, dividends, or interest income, does not qualify, nor does capital gains taxes. But there's a way around all of this. Additionally, if your foreign income exceeds the exclusion amount, the excess is still subject to U.S. taxes, but I just said that. And also, you're still required to file a U.S. tax return, even if all of your foreign earnings are excluded. Now, this is all with IRS's blessing, because they have to approve your Form 2555. If you want or need to understand this tax benefit more clearly, you can do your research and hire a tax professional to make sure you get the full exclusion. Guys, people who understand the tax laws, the tax codes, they are not paying nearly as much in taxes as most people. It's all about your level of awareness.